Good afternoon. Thank you all for sticking around this afternoon. My name is Tim Queen. I'm the Global Head of Insurance Consulting for Cognizant. And it kind of struck me walking out here just a moment ago as I heard again the repeat of Hartford being the insurance capital of the world. It's just interesting to me, and I'm glad there is that partnership with the UK side as represented on this panel today, because I'm sure there are some heads turning on Lime Street about now too, about hearing, isn't it Lloyd's? Is it in the London market? Along those lines as well. So a good competitive nature, if you will. But I'm really glad you're able to spend some time with us this afternoon. I have a great panel here that I'm very fortunate to actually be spending some time up here. And beginning on my left over here, we have Raghuveer, who is the head of climate insights and advisory at Munich Re, American. Then we have Jonathan Jackson, hailing all the way over across the pond from the UK. He's the CEO and co-founder of Previsico, which is focused on advancing technologies that enable flood resilience for people and organizations. And last but absolutely not least, Eric Nelson, Senior Vice President for Enterprise Catastrophe Risk Management here at Travelers here at Hartford. So, we're going to begin today, Raghuveer, with considering just a topical question off the top for you. As we talk about the major impacts, the frequency and severity of the storms that we've been seeing in the marketplace, I wonder if you can share some of your views on what impacts it's been having within the reinsurance market itself.
Sure, thank you, and good afternoon, everyone. Now we are the last panel, so hopefully we'll make it smooth here. I think that's a really hot topic, so but I also like to introduce myself as a displaced hydrologist, right? So who's thinking about floods all the time. So within that perspective, I'd like to give some numbers, and I'll start with the numbers because that really gives a perspective. And so last year, 2023, the severe convective storms in the United States created insured losses of $65+ billion. So that kind of gives you a sense of what the insurance and the reinsurance industry collectively paid for the losses that were incurred. Another number that kind of sits in terms of what is an opportunity, but also a kind of addressing some of the climate risk, goes towards the peril of flood, and that was in 2019. Now, all the years, floods do impact a lot of communities, even this year, last year, but 2019 was different because this impacted the central Midwest United States, which is the Mississippi River. It was one of the historic flooding, and the total losses economic losses exceeded $25+ billion. But over there, what we saw that the insured losses was less than 200 million. So basically, less than 1% was really insured. And this is the heart of America, and this is where a lot of like agriculture, tourism, a lot of things, a lot of industries exist. So it did impact people's life quite a bit, and note that the pandemic followed that big event. So, so when it comes to the frequency and severity, we start looking at these events and we say, right, what's really missing? And let's get back to the fundamentals. And if we think of risk as a function of exposure, vulnerability, and the hazard, we know that the hazard is changing, and that is something that is not in our control. At least, even if we take all of the emissions and control them today, that's not going to change the weather and hazard of today, or at least in the next 10 years, it won't change. So, what's really can be changed is vulnerability. We can build back better. I think the previous panels talked about that. And then the exposure is really, it matters because we have seen after the pandemic there was a lot of change in exposure, increase in exposure in certain states. So with that in perspective, what we want to go back to the fundamentals is the risk transfer continuum, what we call it. And risk transfer continuum says that if we really want a sustained insurance, reinsurance market, then what we want to think about is risk assessment and risk communication becomes the top of the list. We really need to understand our risk, at least in the coming years, and because that is what will drive the decision making that we will be making in terms of the exposure changes, in terms of the building codes and so on. And then comes the risk management and the mitigation part. So that's the next important point. And then we come to a product of risk transfer that fits the needs of the communities and the products. So I'll stop there, but I think that's how we are really thinking about this as the frequency and severity changes.
That's very interesting, and as you say, going back to the fundamentals underscores it all, right? Remembering where we came from, but going back to not losing that root. And so, Eric, from your perspective, from a primary insurer standpoint, how would you actually view some of the things that you spoke about here today, and from your position, how do you see it differently or the same?
So let me just start with building upon the discussion that we had earlier. You know, insurance companies here, we're here to spread risk over people and over time and help communities recover. We talked about that earlier. One of the other aspects that we really lose sight of sometimes is we provide a risk signal to consumers. I'm going to say something controversial. Risk rating 2.0, I think, was very good in that it sends more accurate risk signal to consumers. So you think about, for years, we had such massive subsidies in the flood program that perhaps where we developed wouldn't have happened if they actually had to pay the true costs of flood risk. And as a country, we're now paying that price because we've developed really where we shouldn't have developed. And so that's a key aspect. When you can have risk-adjusted rates, it sends a signal to consumers on what that risk is. And let me just give an example. You know, everyone knows that if you have a doctor in the family, they always ask advice, or a friend. Well, if you're in the insurance industry, your friends ask you advice. And my friend was buying a house in South Florida, a modest house. And I said, boy, before you decide on that contract, you go get a flood insurance quote. And he said, wow, it was $10,000 for that 1,500 square foot house. Didn't buy the house. He said, that's way too much to pay for insurance. And I said, I knew that. You're in the highest risk area of South Florida, a quarter mile from the beach. Of course it's going to be expensive, but that's a risk signal. So with that, I just want to also just talk about loss trends for a minute. This is a great conference. We're talking about climate, but I want to make sure that we talk about beyond why losses are up. We have to make sure we understand weather contributes to the loss trends we're seeing. It is not the primary driver. Sorry to say that. Inflation is the primary driver of why losses are up in the United States over the last 5 years. It's inflation. You probably have all seen housing prices go up dramatically. Well, if housing prices are up 50%, insurance is up at least 50%. And so inflation is the #1 driver. In addition to that, what might not be common knowledge is supply chain, everything else post the pandemic, roofing inflation is dramatically higher than general inflation. And so IBHS talked earlier today about insurance. It's all about the roof. It starts with a roof. So beyond that, there's other factors that come into play here. Urbanization. As you have more people in a concentrated area, it's a bigger bullseye. You also have, in some cases, contractor fraud. I know the states have some great programs to get at that, but we've seen that. We've seen contractor fraud in certain states. And then legal environment. Florida's an example of a legal environment where legal costs have spiked for catastrophe claims. They've taken action now, but that's one of the reasons why losses were up in Florida. So I just want to make sure we all understand the weather is important to understand and really to devise your strategies, and we'll talk about that more, but inflation is a challenge today. Thank you.
Yeah, great points. And you know, I never thought about it, but in 1985, I was a kid growing up in Long Island, New York, just across the sound from here, and it was Hurricane Gloria that came through as a Category 1, which eventually then also hit Connecticut. But I think the total loss on that was around $900 million. But if you go to 2023 and you look at just a storm, a really persistent storm over Fort Lauderdale was about $1 billion worth of loss in and of itself, right? So, Jonathan, you heard what Eric had to say, and you're coming from a different perspective, right? You're coming from one that's related, but you're looking at innovation. How do we solve the tough challenges that are ahead of us? And I was just curious about maybe you could share with the group here just what your perspective is and what you're seeing from a market about innovation and the sort of tooling that's being brought to bear to help us address these issues.
Yeah, thanks. I've got a different accent and I've got a bit of a different perspective on this as well. So I guess where we come from, we are in the world of providing flood risk warnings. So effectively, we're providing a service which enables people to have an advance warning of floods so they can take action to prevent loss. So governments provide warnings for main river and coastal flood. We kind of fill the gaps in the government warnings. So just to give a bit of context about kind of where I come from. So Raghuveer's points about communication, that plays right to the heart of kind of what we do, because fundamentally, as we're hearing from Eric as well, people have to understand risk. Well, one of the ways you understand risk is you communicate it to them, and getting risk across is really key. And I think that it's a lot of things that have been discussed today, and again, picking up from what Raghuveer was saying, is that the way that flood as a risk is changing is really getting quite dramatic now. And I had a great example when I was in Wilton, Connecticut yesterday, and I met with a large manufacturer there, and I also met with a deputy fire chief of Wilton. And we were talking about the flood that had occurred at this particular location of this manufacturing plant. And the fact is they'd had risk engineers come in, do a fantastic risk assessment, said this is where your flood problem is coming from, this is where you need to protect against. Flood hit the particular location that they had identified, which was a culvert, no problems at all. It was in a completely different side of the plant. And talking about why that was, it was down to the fact that everybody felt that this particular storm had come in and literally sat over the town for 7 hours. So they had 8 inches of flood water for 7 hours. And they said previously, convective storms tend to go through pretty quickly, but this just stuck there. And so that was a very different experience than they'd ever had before. So as from a risk engineering point of view, the risk engineer's thinking, I'm basing this on what I know, but unfortunately, what we know to me is a lag indicator. It tells you where the risk was, but it's not necessarily telling you where the risk is going to be in the future. And I think that's a really big issue. The other thing that really struck me was when I was talking to them as well was we were talking about the town of Oxford, and it turns out that the town of Oxford had what was considered to be a 1 in 1,000-year flood event. And so, again, the deputy fire chief was saying to me, he said last time something like that happened was in 1955 when Hurricane Diane hit. So I said, was that a 1 in 1,000-year event as well? He said, yeah. And I think that sums up one of the big problems that the industry faces, is stop talking like that, because it's completely meaningless to people. They have no idea if you're telling them they've got a 1 in 1,000-year event, yet one's happened within less than 100 years. It's a really complex area, but fundamentally there's a lot of things that we have to look at to help better communicate the risk that they face with flood.
Yeah, so Eric, as Jonathan was talking through that, it came to mind, of course, another, I think, third rail for you would be around this idea around secondary perils, right? Concept of the fact that something that's trailing this larger event, but at the same time, too, just thinking about just singular events. There's a lot of nomenclature, a lot of language around categorizing these as being different, right? But we look at the economic and the people impact. It seems to be really not all that different than what we used to look at from just hurricane or tropical storm, if you will. So I'm curious for your perspective specifically around what sort of changes we need to have around this topic of these categorizations. From where you sit, is that language helpful, hurtful, and what do you see as being maybe a change that needs to occur?
Yeah, we need to talk better terms. If a consumer has been hit by the roof blowing off their house and it's a secondary peril in the news, no, it's not. There is no such thing as a secondary peril. We have to end that conversation in the United States. If you look at severe convective storms, so that's winds, tornadoes, hail, the last 30 years, the insurance industry has paid out more for that peril than any other peril. More than hurricanes, more than earthquakes. It is by far the largest peril that we have to deal with. The message has to be that everyone in America is exposed to high winds at some point. And I think that's the key challenge. And let me move over to flood, because I think I listened to Superintendent Dwyer this morning, and I completely agree with her. The way we describe storm surge and flood damage and the way we describe things is wrong. That the banks go, because it's a federal requirement, and they basically say you only need flood insurance if you live in a high-risk zone, is the wrong message. Years ago, we worked with Wharton, and Wharton talked about effective risk communication. It would be much better if in the home disclosure package you said instead, you have a 30% chance of having a major flood damage in your house over the life of the mortgage, or 40% or a 50%. That would cause consumers to more likely to choose to buy flood insurance on an optional basis. So as we talk about risk, we have to stop categorizing these to the 1,000-year event, that it's a secondary peril. You have to really disclose people, give them more information. I think the last commissioner panel talked about enabling the consumers to understand risk better, and that's what I think we need to do.
So Raghuveer, you've heard Eric's comments along those lines from a reinsurer's perspective. Any differences, nuances, and especially being a frustrated hydrologist being caught inside the insurance industry. Just wondering if you have any comments more specific to that.
True. But I think I also wanted to add one point, what Jonathan brought up, and the concept of risk is something that that needs to change. How many times have we heard someone saying, in my 35 years of experience, I haven't seen this event. Not to go into too much details, but recently I went to New Mexico for a backpacking trip, and we were hit by with Scouting America, and we were hit by a hailstorm, and the group decided that they want to keep going, right? And they ended up hiking in hail for 1 hour, right? And a couple of hypothermic situations and all of that. And then at the end of it, we hear, in my 35 years of backpacking experience, this has not happened. In my 10 years of experience, it has not happened. So the concept of risk needs to change, where we, of course, past can give a sense of what can happen, but the future uncertainty also needs to be factored in. And I think that's what the industry is also, has a long way to go, but also we have been putting a lot of work and a lot of resources into kind of addressing that assessment and communication of that risk. So having said that, to come to that point, I think, yes, as a frustrated hydrologist, these are terms that keep on coming, but I think we are addressing, as a reinsurance industry, we like to think of it as a reinsurer. At least my personal view is we are like a sonar scanner. We like try to look into the future and say, all right, what signals are we getting, right? And if the risk is really increasing, how do we see certain products, what kind of products do we need? And so that's the thinking that we are trying to change. And one of the things as a reinsurer, we realize that we do not have a seat at the table at the local communities. We did not, at least in the past. But now we are starting to work with the local communities, because in the United States, the amazing thing is the local communities are empowered to manage their risk. But that's great. However, as an industry, between the insurance regulators, the commissioners, and the industry, the risk is being managed by someone else. So we have to have a seat at solutions that are more tailor-made to the needs of the community. And especially for perils like flood and wildfire, we have to start thinking in a different way. How does risk mitigation at a community level get factored into the insurance products of the future? Again, our view is a sustainable insurance market needs constant innovation, which is what you are focusing on, Jonathan. And that requires innovation at all fronts of the risk transfer continuum that I mentioned.
Very good. That was a nice tee up to you, Jonathan.
It was. I was realizing as well, I should have taken you to Wilton with me yesterday, Raghuveer, because I needed a hydrologist on that site, believe me. Yeah, so, I think that everything you just said there absolutely resonates. I mean, fundamentally, if I look at where things are right now, one of the things that we probably would say is our most successful achievement as a business to date is actually at a community level. And it's a little story I'll share, which is that in the UK there's a community that lost about 300 homes and businesses to a flood. And it was all caused by the fact that they have a culvert, and storm comes in, brings down debris, builds up against the trash screen on the culvert, and causes massive flood. So what we realized was that actually if we just put one of our sensors there, along with our flood forecast, we were able to give the flood warden in the village advanced warning of flood. And her resilience measure, because the other thing too I think is, again, descriptions as we were talking about. So resilience measures people think very expensive. The resilience measure in this community is she takes a rake, she goes down and she rakes off all the debris from the trash screen. She has successfully mitigated 100% of flood loss on 8 different occasions in the space of 3 years. So I think that plays exactly to what Raghuveer is saying, is that there's sometimes there can be some really simple and easy wins out there, but again, unless the industry, unless the data comes back again, it comes back to this point about data, people understanding that, insurers, they don't know about this, so unless that comes back, that's a really key area. So this community level side to me is one of the areas that we as a business really want to focus on. Where we are at the moment is that we tend to work with large organizations. So another one we work with is a company called National Grid, who some of you may be familiar with. They a power utility who operates in New York State and Massachusetts. And kind of with those guys, we're placing sensors at various sites, and again have our forecast working as well. And what we've realized is that, in the same way as in the village, the community in the UK I mentioned, is that where we put our service in with a sensor, we can potentially be covering thousands of properties. Well, we've just got one client who's using it for one asset, one property, yet there's thousands of people who could benefit from that. So how do you then take that out? And, a power company obviously is a key part of the community, so we're looking at ways in which we can work with them to actually extend that service across the community to get the service out to more people. And so for me, that's great that we can do that, but then it comes back to the next point, which is you give somebody a warning that they're going to get flooded in the next few hours. You better make sure they know what to do, because otherwise all you're going to do is cause panic. And so that's the next critical element for me, is actually what do you do with that information, and how do you try to mitigate the losses that come about from that. And again, sometimes it can be really, really simple stuff. Some of the most basic things are just turning off your gas, turning off electricity, and turning off your water supply, and that can save an awful lot. But we now know of businesses, there's a great example we have of a bookshop who, when they were being flooded in the past, they couldn't resume business for 6 months. So 6 months of business interruption, couldn't get insurance. So that forced them into then investing in various measures, resilience measures, which were often very simple things like raising electrical sockets higher up the walls, thinking about actually where their shelves were for the books and actually again raising those up, etc. And they are now in a situation where they are able to reopen the shop within 3 days of having a major flood. So what used to take them 6 months now now takes them 3 days. And again, the impact from the insurance side is really significant. They can now get insurance because all of a sudden that is a much more writable risk for any insurer to take on board.
It's interesting as you were talking about the community and communication. I now live and have 25 years in Northeast Florida, and we had a hurricane that came through. Actually, it was not. Again, it was one of these smaller storms, less impactful, but it did flood 1,000 homes in our county. And principally, the reason for that was these clogged storm drains themselves. And I think it's definitely overlooked. And so those types of solutions can be very impactful. But it also reminded me too, that earlier today we were talking about where is the younger generation concerned about insurance? Do they really have a care or concern? And it's kind of an unfortunate story, but I would tell you that my children have lived through these storms in Florida. And so even that story of where we had all these homes flood, they have memories of taking paddle boards to go help get the items out of the house, right? And then ultimately how to mitigate the losses and take out the drywall before, because there's such a backlog of assistance before assistance can come there. So it's really interesting that the solution you're putting there for the audience, but at the same time too, it just reminded me of the fact about that, again, we're talking about the impact not just of property, right, but it's to the people themselves. And just, for a moment, I just want to call your attention to the QR code that should be flashing up here in a moment or two. That's how we're going to take questions for this panel. So when it does come up, if you would go ahead and take a picture of that and go ahead and enter any questions you might have for the panel as we're up here today. So Jonathan, maybe just staying with you, there's one thing about the village you were talking about, which is we assume in the UK it's a village probably was long-standing, has a very long history, if you will. Here in the US we have certainly a lot of changes happened since COVID. It's migration, if you will, within the United States. And principally we see people moving to definitely areas that have higher exposure to wind or climate or weather-related risks, if you will, and also businesses, right? And in fact, also a number of the energy transition projects, whether it be wind farms or whether it be solar panels, also tend to be in places that in some cases haven't been fully thought through. But as this changes, right, we talk about the 1,000-year storm. When you think about the maps that are made from a standpoint of predicting where, in fact, floods may be, as we see changes in patterns and migration and where people are now inhabiting different places that were never intended, years ago, just kind of curious at what you see from your standpoint from the industry about being responsive, reactive, and being proactive about really looking for those areas and how or what tooling you might actually see being brought to bear.
Yeah, it's a really important question, and I think that one of the things that we actually see, which you just picked up on with in your example in Florida, is when you get people moving into communities and those communities start to really grow, you start to find various challenges. But one of the single biggest flood challenges that is faced is actually around drainage. It's simply, is there enough stormwater drainage capacity to handle the amount of water that is coming through? And there's a lot of communities that still have what's called combined wastewater and stormwater drainage. So those are the most challenging ones, because unfortunately in those drainage situations, when the stormwater hits, it overwhelms, they have to release the wastewater, and that's not very pleasant, and seriously damaging in many different ways. So there's a definite challenge. I see that, and that is already there. But as I say, you start to get more and more people coming to a location where the infrastructure just can't handle things already, and never mind you then adding more population into that. There's a really big challenge on that front. I think the other thing, coming back again, is around education too. People. So when I actually lived in Florida for a time, I lived down in Fort Lauderdale, which I loved. And then I remember seeing the first hurricane warning and seeing people out there banging up the various boards to protect their properties. And thought, oh, that's really interesting. They're going to do that. But how many people actually, again, know what to do? facing one of these situations. You know, we heard about extreme heat. You know, that's a really challenging one again. So flood, particularly difficult, I think, because of the fact that flood tends to hit you in so many different ways. There was a comment earlier about mental health issues, and there actually has been a study done which says that you are 9 times more likely to suffer severe mental health issues for a period of 2 years or more if you were hit by flood. So yeah, when you're moving into an area where you're unaware of the risks that you face, it's definitely causing a lot more problems, which again impacts around the whole insurance side as well.
Yeah, last point on mental health, the home that I know my children have a good memory, not a good memory, that's the wrong way of putting it, but they have a memory, a clear memory of moving out of and helping those families out of. I remember their wife actually saying the fact that she'd much rather suffer the house being burned down than having to live through a flood, which is a terrible testament to what they were living through. So Eric, just passing that back over to you though, when we look at this challenge of the changing demographics.
So I think about back to my childhood for a minute. My grandfather used to always tell me about those stories for the hardy New Englanders. You know, he would trek through the blizzard to go to school, 5 miles in 3 feet of snow. You know, you all remember those stories, right? So I tell my son, hey, I had to trek to school too, but maybe it was a half a mile and it was a foot of snow. Who knows? But now, where do we think today? Well, now the environment's changed. Now, so it snows a quarter of an inch, we cancel school, where they work remote. It's great to have technology. But perhaps a lot of people and the younger people don't want to live in these hardy New England environment anymore, or the Rust Belt of the Midwest. And so what we are seeing in the United States is a migration south. And what we haven't talked about yet today, we talk about codes a lot, but we don't talk about that probably half the geography in the United States has no building codes. No building codes. Building codes are strong in the Northeast, along the coast. You know, Florida has really strong building codes. The Gulf Coast, maybe a little less. Alabama's made great progress, we know, on voluntary. But many other spots don't have building codes. So as you have more migration of our population to areas with no codes or weaker codes, guess what? Of course the losses are going to go up. And we've talked about the importance of codes. So I think that is part of the challenge we have. We also have a challenge of the population movement. South Florida, there's a lot of reasons why people are moving to Florida, right? They love the sunshine, they love the new taxes, they love the policies, I don't know. But whatever the reason is, South Florida, you think since around 2000, property values are up about $2 trillion in South Florida. So if you're an insurance company, you have to understand, we have to have a pool of money that's set aside called capital to pay our claims. As the concentration goes up, we have to actually charge within our rates a fee or recouping that return on that capital. So we'd like, as an insurance company, the spread of risk. And so as those areas are really peak exposure, insurance goes up. And so in South Florida is experiencing that right now, where insurance prices, because of a variety of reasons, are going up. But concentration is one of those also. So we just have to understand, as a country, our public policy ramifications of what we're doing. And so as we see population growth, it would be great to see corresponding codes and corresponding betterment of codes.
So I think those are great points, and I do want to touch on 2 points. One, I like to use the word adaptive planning, and I think that's something that's missing in most of our risk management in terms of the building in new areas, changing exposure, and so on. And what does adaptive planning mean? It just means that we know what we know as of today for the next few years, but at the same time, we will know better in a few years for going forward. So we really need to come to that point where that the information that we have available today So, and that brings me to thinking that that's what happened with Superstorm Sandy. When Superstorm Sandy hit New Jersey, a huge part of the infrastructure was not resilient to that. And some may argue that that kind of infrastructure is now more resilient to the storms of the future. However, are they resilient to the storms of the future that we know as of today, or was it the information that we knew as of 2013 or 14 after the event? So, and then that's really the point. So when we talk about adequate building codes, adequate land use zone requirements, these need to be constantly updated. So there's, I mean, I agree the building codes are stronger, not strong, in the over the coastline, but that needs to keep on getting updated. The other point I wanted to bring attention to is something that we, as a company, we looked into, and as an industry, we always look into blind spot risks, and blind spot risks are kind of sometimes known as Donald Rumsfeld used to call it as known knowns, known unknowns, unknown knowns, and unknown unknowns. So this is like more of the unknown knowns, and which is the infrastructure, bringing it back to what Jonathan you talked about. And the critical infrastructure of the country is really a blind spot for us. We all know the critical infrastructure of the dams and the levees are really in a bad situation. And so we did an analysis which we found that about 1,084 dams in the United States are critically exposed to failure with an average age of 100 years or more. So are we waiting for some other event to happen by itself? But let's also think about what if a northeast hurricane comes in and hits the New Jersey, New York area? There's 78 dams in that region that could be exposed to extreme weather. And mind it, the recent dam failures that we have experienced, whether it's the Michigan dams of 2020 or the recent dam failures in Minnesota, the Rapidan Dam, and then the Nashville Dam, all of these were critically scored high and with more than 50 years of age, and they all got failed because of extreme precipitation. And this is the change in the frequency and severity that we were talking about. And so these are risks, again, brings back to, and being emphasized by Jonathan also, about the risk assessment and communication. So we really need to bring that. So adaptive planning and really making that risk assessment and the risk information available and accessible is really going to be important.
That's great. Staying with you for a moment here, and I think it builds off of this. We have a question from the audience, and that is really about looking from a standpoint of partnership between policymakers as well as private insurers. How or are there any opportunities, if you will, to address these issues that we see before us today that could provide an immediate intervention, if you will, to help mitigate both economic and non-economic risks that we face today? So is there something that is tangible, something that's foreseeable, something we know today that said, if we were to do this in the next 1 to 3 years along those lines, is there an opportunity for us to be able to look at how policymakers can partner with insurers to really make an impact in the near term?
Yeah, I would say I think there's a lot of information, but if we focus on the near term, then the first thing that comes to my mind is public-private partnerships, right? And public-private partnerships can happen at different scale, different levels. I think the best public-private partnership that comes to my mind always, and I like to give that as an example, is the Caribbean Catastrophe Risk Insurance Facility, where multiple countries come together and put together a facility where they insure themselves from hurricane risk, and with the assumption that not every island is going to be hit every year, but at least one or two may be hit that being said, I'd like to bring it back to something over the Mississippi River that the industry has been focusing on. Again, the Mississippi River is really the heart of the country, which impacts the exports and a lot of the industries of the. So why can't the states come together if the countries could come together? Why can't states come together? I think there is a requirement. There is, when we found in the 2019 floods, there were certain cities and towns that were on the Mississippi River that did not have $25,000 for emergency response. So we're really talking about towns that require a response that is immediate. So parametric solutions can be significantly beneficial to these communities. So I think that would be my view of what is the short-term solution, because ultimately resilience means all of these factors that we have talked about, building strong, and the previous panels on nature-based solutions. All these will take time. However, we also need to address the response of these communities, because the timeliness of the funds to these communities to recover has an immense impact on the resilience of these communities.
Good point. Eric, maybe you can share some thoughts you might have on this as well.
You know, IBHS is a relatively new organization. I'm very proud that Travelers was one of the founding members of the research facility down in South Carolina. IBHS was formed after Hurricane Katrina. Let's face it, the insurance industry, we're competitors. We do not agree on everything, but the only thing that we really agreed with post-Katrina was the need for more resilience. So about 90% of the insurance industry got together and built the IBHS facility. It is 100% funded by the industry only. There's no government funds involved. We've spent $100 million, maybe even $200 million by now building that facility and running it. And so part of the mission there, as we've talked earlier, is about what do you do for future codes? What should we be doing? And there is examples out there through building codes I don't want to lose sight of. I'll get back to Alabama in a second. Alabama's one great example, but we've said code future. But the future is now in Florida. Florida has now implemented the equivalent of an IBHS fortified home in their codes, right? Just about. And so you look at that, that is a great success story. Now, IBHS did a study about what was the impact of building codes from Hurricane Charley. This is an old study going back years. And they said, well, the building codes in Florida reduced the losses by 50%. That's pretty meaningful on the amount of mitigation. So let's face it, for whatever reason, we don't have the political will to strengthen our codes everywhere. We're going to have to go slower, and we're going to have to demonstrate. And that's what I look at as the Alabama success story. What we did at Travelers, and many in the industry did, was we sponsored Habitat for Humanity to demonstrate it was possible. What we haven't talked about today is how much does it cost? So Travelers, we have been sponsoring Habitat fortified homes for almost 20 years, 15 to 20 years we've been building these with Habitat. Our experience, they're smaller houses, it was 5 to 8% additional costs, right? And some of the superintendents talked about this earlier. We could build a home to withstand a Category 1, Category 2, maybe even a weak Category 3 hurricane. We could if we chose to. So we're spending a lot of money post-events rebuilding to codes that shouldn't be there today. And so that's just an example of something. But what can consumers do? What is top of mind with me is wildfires, because that is an emerging peril that is really complex. And that is something that IBHS has leaned into it, as the commissioner said earlier, getting those standards out there. Wildfire prepared home is something consumers can do a lot of things. You can clear the brush around your house. It's very simple to do. Clear the brush around their house. For severe convective storm, for all that wind claims, consumers, look at your trees. If you have branches over your home, trim them back. Move trees away from the homes. These are the dialogues that we have to do a better job communicating to consumers to say, okay, here's the thing in your control, here's the items you have to do if you build new. Now, let's face it. It is quite difficult to completely fortify a home to a fortified gold standard. It's more expensive if the home is already there. So we have to really start with the construction we have, new construction, and make sure we get that right, and then focus on retrofitting the roof.
Quickly add a point. I think the importance of what Eric said about risk mitigation is really important, and it's critical, because especially connecting it back to the frequency and severity, and going back to the basics of insurance. If insurance is not trading dollars, it is about its protection, or it's a financial instrument to protect against an unforeseen risk. And if we see that the exposure that we have is experiencing events that are causing losses every year or every other year, then we need to be able to mitigate that risk, right? And that does not mean removing the risk. We really need to mitigate that risk. So one more thing is there are a lot of chief resilience officers that are working on updating the infrastructure and really revisiting the land building codes and all that. I think the question for the citizens should be to also go back and ask them, what is the impact of these decisions on the insurance availability and affordability? I think that way there is clear insights about how those funds will be used towards the infrastructure which will protect these communities.
Great. Any comments, Jonathan?
Yeah, I guess listening to this, one of the things that really struck me, clearly there's the insurance dynamic, which we completely agree with both what Eric and Raghuveer said. I'm just thinking, my thought was actually going to those people who aren't insured. 40% of insurance claims fall outside of the NFIP zones, and that's a real issue. That there's that many losses that are falling outside the zones. So the challenge that was mentioned earlier in the day was how many of those communities are actually some of the most underprivileged communities, and so what are we doing to help them? And one of the things that I think is really key is to focus in on that. And coming back to Raghuveer's point about the partnership piece, in the UK we work with both Zurich Insurance and in their municipalities division, and their municipalities division actually insures a lot of social housing, and through working with them, we've now got the social housing organizations to actually engage more with the tenants, so that the tenants now can actually be able to respond and actually hopefully save some of their assets, as when a flood hits. And I think that sort of partnership is so key. The only way these communities which can't afford insurance are going to have some help is through this engagement between public-private partnerships. And definitely the Red Cross point this morning is spot on. I mean, what they were doing around fire alarms, I was just thinking to myself, wow, if they could only do that as well for flood, just go around communities helping people understand what to do, and be able to take advantage of that bit of education, because it has a huge impact, as we could see.
Just adding to that comment on the flood, what was striking to me is there's only 4.6 million policies in NFIP today. I actually, when I pulled the number, I was surprised, 4.6 million. And it's down about 10% over the last 5 years. With all of these floods that you see on the news, and it's right in front of you. So I agree with the commissioner earlier talking about maybe there's other solutions that they have to think about, is community-based solutions. Maybe there's something else. Let's face it, the NFIP is not working today, but I have to admit the private market I don't really see as a solution because of the costs. I think we have to look at something completely different to to mitigate the flood and think about the risk and protect consumers.
You know, some have said that maybe it should be incorporated into HO policies, but as you made note of the fact that the expense, the cost of doing that at this time is it's prohibitive. Maybe just letting everyone know here, there's a backlog of questions that are here. Really enjoy those that have been sent in, but we are out of time as we are being flash read here. But I really want to thank the panel for joining us here today, and also for the questions and support from the audience here. So thank you very much, and we're very close to the end of the day.
Thank you.
Thank you.